Ladies and gentlemen, with 24 hours left to go in my THORnews fundraiser and $340 needed to be raised, we'll be talking about a little bit of everything today. And that starts with economics. Dominic Chu, the Dom Nino, talking about the Dow Industrials now fall below the 200-day average. And I felt the urge to make a list, but I'm not going to. And then, God damn, U.S. hits Scotch, whiskey, Italian cheese, French wine, and 25% tariffs as the trade war extends to Europe. It's crazy. One thing I'm going to talk about in this thing, and remember, I don't believe in any of the political bullshit, whether it be Republican or Democrat, because it's all about the money. So what I've been talking about is that the economy is in really bad shape, bro. How do I know? We're looking at pictures of Henry Paulson. You see why the repo market is such a big deal and why its $400 billion bailout is so unnerving. Okay, that's Fortune magazine, right? And that was on the 23rd, which was about 10 days ago. And today, the New York Fed adds $33.55 billion to the financial system by using the repo market to relieve funding pressure in money markets. Okie dokie. So, we had 2 interest rate cuts in the last few months, and those are the first interest rate cuts since the 2008 financial collapse. And then, now we have the Federal Reserve making open market purchases in the repo markets for the first time since, guess when? If you guessed the 2008 financial crisis, you are correct. And so to have 2 Federal Reserve interest rate cuts in the face of extremely high markets, and to have the Federal Reserve having to use their monetary tools to keep things up and running, you can bet your sweet pippy that, yeah, the economy's not in such great shape, bro. And so, I don't know if you knew this, but I've been really great at covering economics. And then it got to the point where when we hit about 26,000 in the markets, I was like, there's no reason to keep reporting on it because it'll stay kind of in this range until they announce their next big round of quantitative easing. And so that's pretty much what I think is going to happen. You're going to get a crash or a correction, and then they're going to say, we need a giant quantitative easing program where they basically print money. And then so they'll add a whole lot of money into the system to keep up the compounding interest rates from bringing it all down. And our president has even called for quantitative easing without the crash, I guess to prevent the crash, because we can all see it kind of coming. And so that's where we're at. So yeah, dude, I'm sorry, but the economy's not in good shape. Every other truth community, every other truth channel will tell you that the economy is doing great, never been better, but that is not true. Here we go to read the article. New York Fed adds about $33.6 billion to financial system. Repo market is used to relieve funding pressure in money markets. And you may be saying, hey, dude, why would I trust a guy who scrapes by and depends on contributions and donations every month just to pay his very basic bills? That's a great ass question, man. But the deal is, money's never been my main focus ever. I mean, technically, if I had a weakness, it would be beautiful women. But apparently, they've kicked me cold turkey. And so, I've been looking at economics as like trying to figure out how to save the world and prevent future problems. And so that's how I can pick up a lot of things people miss. Okay, great. The Federal Reserve Bank of New York added $33.55 billion to the financial system today, by using the market for repurchase agreements, or repo, to relieve funding pressure in money markets. Banks asked for $33.55 billion overnight reserves, all of which the Fed accepted, offering collateral in the form of U.S. Treasury and mortgage securities. Everybody loves mortgage securities, don't they? You see, in the repo market, borrowers seeking cash offer lenders collateral in the form of safe securities, frequently Treasury bonds. They're like James Bonds, except a whole lot more boring. In exchange for a short-term loan, the term of these loans can be as short as overnight. When the Fed adds money to the financial system through the repo market, it is acting as a lender. In a typical repo market transactions, lenders can include money market funds, mutual funds, bank or hedge funds that are seeking to earn a slightly higher rate of interest than what is available from holding very short-term government securities. The borrowers are often banks, security firms, or hedge funds that use cash to finance positions in the markets. And it's almost never the average Joe on Main Street. Banks and hedge funds borrow or lend depending on their needs and investment goals. The Fed began offering repo loans 2 weeks ago after a shortage of available cash in the financial system led to repo market rates to climb as financial companies scrambled for overnight funding. The actions mark the first time since the financial crisis that the Fed has taken such actions. And so when we're having to say, oh, we're cutting rates for the first time since the financial crisis, oh, we're revving up the repo market again since the first time since the financial crisis, that means the economy is not in great shape, bro. I mean, I hate to break it to you. And that's why I've been saying that I can't see a reason to be in the market right now. I mean, the double tops are in, and it looks like it's going to crash or at least correct. It's only a matter of when. Now we're at Fortune, why the repo market is such a big deal, and why its $400 billion bailout is so unnerving. All right, we're going to read this. Hey, get off my screen, little video man. No offense. Do 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 do. I dream of genie work for free. One of the most vital pieces of plumbing that powers the global financial system usually runs so smoothly that it gets overlooked by market watchers. Remember this from the 23rd? It's the repo market, comprising the short-term funding that bank and financial counterparties regularly tap to lend each other trillions. Sounds like money changing. It's suddenly in the news again for all the wrong reasons. The repo market is looking a lot like it did on the precipice of the 2007 housing market crash. All right, so yeah, dude, the repo market is looking a lot like it did on the precipice of the 2007 housing market crash. And so, I try to avoid politics absolutely at all costs, like it was bed bugs herpes. And so that's why, I don't know, man, if you really want to be caught up in the political cheerleading when our president says the economy is stronger than ever, if you want to invest everything in the stock markets and max out your 401k, go for it. But I'm pretty sure we got a crash coming, man. And I think the Fed's balance sheet is anywhere between $2 trillion and $4 trillion. So if you add that on top of the $22.7 trillion, we're just in weird shape. But yeah, I get it. Like, the president can't come out and be like, holy shit, the economy's weak as hell. I mean, I guess you could. I don't even know. I'm not president. I'm just planetary defense commander. And if you'd like to keep me around as your planetary defense commander, I accept all contributions and donations and prayers. I got an address, TLewison 5430 Birdwood Road, number 416, Houston, Texas 77096. I got a PayPal, a Venmo, a CashApp, a Patron. What do we got now? 340? About 24 hours left. Man, it's kind of like a cliffhanger. Always. But I want to say thank you to Kenneth, Athena, Lynn, CJ twice, Matthew, Brady, Kay, Kenneth E., David, Robin, Carol, Brandt, Casey, Elizabeth, Michael E., Caleb, Jacob, Sean, Joy, William, Rob, Geoffrey, and Mona. Without you, guys, I couldn't keep doing what I do. Here we go. Why? But what is the repo market anyway? And why has the Federal Reserve Bank this week injected hundreds of billions of dollars into the financial system to stabilize it? I do want to say another thing that I think is hilarious, because it doesn't seem to me that Democrats or Republicans really understand economics at all. And so when the president has spoke of quantitative easing several times, I have seen nobody on the left and nobody on the right even mention it. And it's like the most important, it's like follow the money. And it's a big major deal, man. Like, and my whole point is, dude, even at like a store who represents the people on the planet, like if they're going to print another $20 trillion, the public needs to get a cut of that, whether it be in super badass infrastructure, a new power grid, like, you know, man, that this is basically socialism for the banks, bro. You know, geez Louise. Okay. Repos, short for repurchase agreements, are short-term borrowing transactions often made overnight. Think of them as trades of cash for some kind of collateral. Oh, okay. So like, yeah. You know, here you can have cash, let us borrow your car. And so the Federal Reserve takes in mortgage-backed securities or mortgage securities or its own bonds or treasuries in exchange for cash. I guess, or flip that. In a repo transaction, the borrower will sell certain securities in their possession with the agreement to buy them back the next day. If the transaction is not rolled over, then the trade has to be settled the following day with the borrower repurchasing the collateral from the lender for slightly more than it had previously sold it for, compensating the lender with interest for taking on the risk. A $1 trillion market springs a leak. Large corporations and banks typically hold vast quantities of highly liquid financial assets. And so they like using these markets as a means of quick and easy financing. Oh, isn't that sweet? In fact, there are more than $1 trillion worth of overnight repo transactions collateralized with the U.S. government debt occurring every day. Banks frequently go to these markets to fund the loans they issue and to finance the trades they execute. That's when it's working smoothly. The repo market seized up last week. Okay? The repo market seized up last week. This was 10 days ago. With median repurchase rates skyrocketing from their usual band of 2% to 2.25% to 2.46%. Wait, what? On Monday and 5.25% on Tuesday? Keep in mind, that's the median rate. Some repo rates were as high as 9%, more than quadruple the Federal Reserve's own target rate, which usually puts a cap on how high Treasury repo rates could climb. Yeah, we should definitely legalize marijuana. Whoa, you too can join the Fortune Company. The Fortune getting its own ad in on my ad. Okay, great. An unlucky confluence of events, including an exceptionally large demand for cash from U.S. companies that needed to pay their corporate tax bills, sucked a lot of available cash out of the financial markets. What happened last week was any counterparty in need of cash and holding collateral like treasuries agreed to pay the much higher going repo rates. That's supply and demand, plain and simple. Yeah, so simple. And it mirrors what happened in the certain repo markets in 2007 before the housing crash and the Great Recession that followed. So what happened to the usual abundance of cash and liquid securities that powers the trillion-dollar repo market? Let's find out, shall we? It's been slowly evaporating. That's what she said. Actually, for some time since the Federal Reserve ended 5 years ago the policy of quantitative easing. It's maneuvered to buy highly liquid bank securities to boost overall bank reserves. The thinking and hope of that controversial policy was that the increased liquidity would encourage banks to lend more and spur economic growth at the depths of the downturn. So they spent like $4 to $16 trillion trying to incentivize banks to lend to each other. Does that sound like some crazy whacked out shit to you, bro? Corporate socialism. I know it hurts. It's like cognitive dissonance going through your gonads, but THORnews brings you the truth, man. Both parties are pretty much the same. Those kind of accommodative actions have been over for some time now, and total bank reserves have steadily been decreasing. They peaked in August 2014 and are now close to where reserves were in 2011. One principal reason for that an elevated level of government debt issuances in the past 4 years have sucked reserves out of the financial system. There's a lot of sucking going on. Yeah, it usually happens when money's around. When a squeeze like the one last week occurs, it's a clear indicator that there aren't enough reserves in the financial system for repo markets to clear at the Fed's preferred level. In central bank parlance, the target rate for the Fed funds rate. That explains why the central bank has been engaged in open market operations, POMO, to inject reserves back into the banking system through overnight purchases of treasuries. And so the Treasury sells treasuries, and then the banks buy them, and then the Federal Reserve buys them from the banks. What? The Fed plans to use open market operations to address funding pressures through the quarter end, and I believe it's going to last till October 10th. We've already spent over $400 billion. And learn more about the adequate level of reserves we expect it to find the U.S. funding markets in a state of reserve scarcity, wrote Bank of America economists in a September 20th note. Remember, these are all limited liability corporations playing with more money than they know what to do with. Even though the Fed always chasing yield, baby. Even though the Fed has routinely used open market operations in the past to stabilize these funding markets, it doesn't look like a few routine interventions will be sufficient. There you go. That's why I keep telling you. It doesn't look like a few routine interventions will be sufficient. So that's why I don't know if you're in gold, although don't have it physical in your hands, or cryptos or stocks, or I don't know. I'm just saying it seems like a bad time to be in the market with so little upside and so much downside before the major quantitative easing round. Moreover, it's becoming clear banks need more reserves on hand. Me too, THORnews. I don't even have reserves, dude. I got $340 to go to even just hit basic Planetary Defense Commander front-end monthly crap. On Friday, the Federal Reserve pledged to allow roughly 2 more weeks of overnight repo transactions going out to the October 10th, each injecting around $75 billion daily into the economy. Okay? Put otherwise, the Fed is back where it was roughly a decade ago, effectively buying U.S. Treasuries from banks on an indefinite basis. But the difference this time, there's no financial crisis in sight. Yet. Just the uncomfortable fact that the private capital markets once again need public support. And so it's like freaking capitalistic socialism, bro. That's why getting caught up either way in the political bullshit is just bullshit, and it's working as intended. I mean, nobody's really talking about the crap in the news, and this is so important. Okay. For all intents and purposes, this will be the equivalent of 2 quantitative easing with scheduled purchases of securities. We estimate that over the first year, the Fed would need to buy roughly $400 billion of Treasury securities to achieve the appropriate level of reserves plus a buffer, the Bank of America wrote in a research note. As plumbing problems go, this will be an expensive one to sort out. So it's weird. It's I don't know. Conservatives before the election were like, hey, dude, end the Fed. And now they're like, hey, Fed, can you please print more money and stabilize the markets? So, I don't, and I'm not blaming anybody for anything, but I'm saying this is what's coming. And usually with the markets, you have Martian money, old money, musty money, then new money, and then the public gets out last. And so I'm the guy here showing you all the reasons, whether it be oil prices, copper prices, crypto prices, everything seems to have double topped already. And so with such little upside until they do QE, I don't know how anybody would be in the market. But hey, what do I know? Like I said, I depend on contributions and donations, and I still got $340 to go. About 24 hours, which would be about $12 an hour. Oh, so wish me luck. All right. God bless everyone. Stay cool. I'll do my best to do the same. Peace out.